Viren, I feel sometimes that like no discussion on sugar is complete without talking about sugar substitutes, which have become, prominent from consumers' perspective. So, can you talk a little bit about sugar substitutes?
Yeah. So sugar substitution, essentially, if you were to look at that, it happens on two different levels. So one is a substitution which happens for financial
Hmm.
reasons.
Hmm.
So whenever the price of sugar uh, becomes too high because of volatility, or in markets where the governments, because of the tariff and non-tariff barriers, the sugar prices are traded at a significant premium to the world market. That's where people have moved to other substitutes. So one of the substitutes which is classified as nutritive sweetener is high fructose corn syrup.
Hmm.
So that's fructose manufactured out of corn.
Right,
Yeah. So so that is one substitute which happens uh, from for financial reasons.
right.
The other substitution happened, which has happened, is for non-financial, and that's mainly because of consumer preference,
Hmm.
right? So uh, there's a need for low calorie or zero calorie sweeteners. So typically, these are substitutes like aspartame and a few other high intensity sweeteners,
Hmm.
which are known as non-nutritive.
Hmm.
There is within the nutritive sweetener space, there is a new sweetener called stevia,
Yep.
and it's a very high intensity sweetener.
Hmm.
So we are seeing that a bit of stevia is also coming, uh, um, and it's not because of financial reasons, but it's mainly because it has 30 to 40% less calories
Hmm.
uh, compared to, let's say, a conventional sugar. So these are the
Yeah.
different kind of sweeteners we are seeing in the industry.
Good. So moving back to the sugar business itself, what are the major factors that influence price in this industry?
So when you're looking at any agricultural commodity, uh, the price is a function of two main things. One is there's a fundamental reason for price to drop or increase, and that's coming out of supply and demand.
Supply and demand, absolutely.
And the other thing which drives the price is a technical reason.
Hmm.
Um, you know, so and in under technical reason, um, you know, so one of the factors is the oil price,
Hmm.
uh, because ethanol
Mm.
is made from sugarcane, and that's a biofuel.
Right,
Yeah. If you look at Brazil, 55% of the sugarcane crop is diverted to ethanol, whereas only
right.
40 comes. And if you look at last year's statistics, 65% was diverted to ethanol, and only
Ethanol.
35%. Yeah, this was not last year, but the year before that,
Yep.
when the oil prices were still trading at about 70 to 80 dollars a barrel. So, so yeah, oil price, what it is doing
Mm.
is because that will determine what is the ethanol parity versus the sugar parity,
Hmm.
and hence that will also decide whether people will divert sugarcane more into sugar or more into ethanol. So
Right.
that's one factor. Uh, Brazilian real and its exchange rate versus dollar is another major factor.
Correct.
So, I mean, uh, you know, 2014, if I look at the Brazilian real versus dollar, it was 2.2,
Mm.
to a dollar. Uh, Today it is 5.75. So it is almost doubled or depreciated by two times. Now, because Brazil is 50% of the world trade is coming
Trade.
from Brazil, so most of their earnings are export earnings, right?
Right.
And hence, uh, what happens to the Brazilian real, and whether that exchange rate will still incentivize farmers to keep producing,
Mm.
because in Brazilian real terms, they're in fact maybe getting better returns compared to 6 years back. So they're not getting any signals, whether the demand may be tapering off, but these guys are happy producing more and more sugar. So these are some of the technical factors which we look, other than the supply and demand. And supply
Right.
and demand, I've already explained.
Yeah.
We look at the major origins. How's the crop looking at like, and what are the yield numbers, and hence what
Mm-hmm.
is the expected sugar production. And on the
Mm-hmm.
demand side, we plug in a certain percentage to then arrive at a global SND for
Mm-hmm.
sugar.
Mm-hmm. 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 Okay. So in India, we know of there is a fair and remunerative price (FRP) for sugar cane. Are there similar things in other countries?
Yes, they are. I mean, as I'd explained, that more than 50% of the sugar sits in countries where there's some degree of
Government intervention.
intervention. Yeah. So in India, it is in terms of a fair price to the farmers. In China, it's in terms of they have like 80% import duty, and you need an import license, without which you cannot really bring in sugar from the world market, and hence the price trades at a significant premium. So the farmers, the millers are more than happy to pay a much larger, or larger premium compared to where, for example, a farmer in Australia or a farmer in Brazil would get. Same is the case with Mexico, and in fact USA, and a lot of countries. So there is some kind of intervention and support
Mm-hmm.
from a government level,
Mm-hmm.
to this crop.
Right. And, also in terms of, you mentioned that India comes in time to time based on its, how big the crop is, and comes in and steps into the export market. So I also read that India's export assistance is like about, 140, 41, US dollar per ton, or about like, 10,500 Indian rupees per ton. And it's supposed to cover things from handling and quality upgrading, and many steps in between domestic transportation, even all the way to the ocean freight. Do other countries also have such schemes?
Not really. Venkat. I mean,
Hmm.
in fact, the Indian subsidy has been an issue of discussion at WTO, where
I can
Brazil and
imagine.
Australia, they were planning to file a lawsuit against the subsidies.
Hmm.
But so yeah. But I think India is India is an aberration, when it comes to production of sugar, because they have wild swings. 1 year they will be at
In the market.
25, the next year they'll be at 20, and third year they may swing to 31 million,
Hmm.
right? And
Hmm.
this 5 to 10 million is a significant, if you consider a global trade of, let's say, 55, 60 million tons,
Hmm.
5, 6 million or a 10 million swing is
Hmm.
significant enough, right? So yeah, subsidies are given where, when India produces excess crop
Hmm.
and they need to get rid of that crop, they need to sell and get money, because that money the mills need to pay the farmers, and there's a huge farm area, and it runs into billions of dollars. So it's important to sell that sugar somewhere, right? You need to find home for that sugar somewhere. Now, if you look at, let's say, 2020 average world market price,
Hmm.
London 5 was trading at $350,
Hmm.
whereas the ex mill price in dollar terms in
Hmm.
India were about 415, $420, right? So there was already a $55 gap.
Hmm.
So so if you have to now sell the sugar in the world market, you have to sell it at 370. So who
Hmm.
is going to take the loss? Mills obviously will not take the loss. Secondly, this is at the mill level, right? So you need to bring out the sugar up to the port, which we
Port. Yeah.
call as the fobbing
Yeah.
charge.
Yeah.
That itself is 45, $50 depending on the location of mill. So if you add up all of that,
Exactly.
it comes to about 100, So depending on where the world market is trading, depending on where the domestic market is, and obviously the fobbing charges, the government then decides what kind of subsidies they will give, which will help the mills or the sugar producers to export sugar out of the country.
Right. So that leads me to the thing, question. You talked about what are the things that influence the prices. So given these kinds of things, government stepping in, crop supply, demand, etc., etc. Like other agricultural crop, there would be volatility and uncertainty in your sugar business too. So are there any additional factors that you want to highlight, and more importantly, how do you manage those risks in
Yeah,
volatility risk,
yeah,
uncertainty risk in the global
yeah,
prices of sugar?
yeah. I think it's a very relevant question, Venkat. I mean, agricultural commodity is an asset class in itself, right? It's become an asset class.
Hmm.
Agricultural commodities, be it coffee, sugar, grains, or anything, right? Like you have the equities,
Hmm.
which is a big asset class. You have,
Hmm.
so that's developed.
Hmm.
Now, if you look, if you take the physical value of all the commodities globally,
Hmm.
depending on which year you're evaluating, it comes to about $600 billion thereabouts.
Hmm.
If you add up all
Hmm.
sugar and coffee and all the commodities.
Hmm.
Now, and these are like uh, some of these commodities are traded on the
Hmm.
futures exchange. Yeah.
Hmm.
If you look at the value of trade on the futures exchange, it is close to $6 trillion. So it's
Right.
10 times the fundamental value, physical value.
Right.
So it's a
Exactly.
classic case of the tail wagging the dog.
Right.
Yeah.
Absolutely.
And
Absolutely. Well
when that
put.
happens, obviously you can expect the volatility. So volatility, clearly demand and supply influence what is going to happen. The government interventions and policies also are a driver of volatility. Suddenly, somebody announces a ban of sugar, or somebody opens up the market and
Right.
allows 3 million tons of raw sugar
Sugar
import.
to.
So that'll definitely, the market will react to that. But then a lot of volatility, short-term volatility, is all coming from the technical side, where speculative funds, index funds, the non-commercial, non-reportable, small little shops which have started trading accounts, and which are trading different asset class, sugar being one of them. uh, Over the last few years, what has also happened is that a lot of trading has moved to algorithm trading, right?
Correct.
So there are
Correct.
certain algorithms which are looking for trends, and the moment they see the trend, they start investing, right? So the fundamental reason for a price to go from $300 to 310,
Hmm.
I mean, fundamental reason might be just $10.
Hmm.
But if you combine all these funds and speculations and algorithm, the price eventually ends up going $70,
Hmm.
$80.
Hmm.
Now, eventually, everybody follows the fundamentals, so the prices do correct, but that creates a lot of volatility in the short term.
Correct.
So these are like
So
two or
how do you
three main
manage those
factors.
risks? How do you manage those risks?
So in the commodity business, there's an old saying that commodity markets are very humiliating, right? There's never I mean, even if you have 20, 25 years of experience, you will never be able to know that, what the market will do, and it can really hit you, when you're expecting the markets to go other side. So I think hedging, whether you're a producer, whether you're a buyer or a trader, uh, hedging your price risk, outright price risk on these futures markets, like whether it's raw sugar at number 5 and New York number
Or
11,
white?
or white sugar. So that is definitely one of the ways where everybody involved,
Hmm.
hedges that risk. And hence, a majority of that uh, risk, say 70-75% of your cost of sugar, is your price which trades on these futures markets. So if you hedge your price, you've eliminated that percentage of your price component from the
Hmm.
volatility.
Right. Okay. Cool. So in the previous segment, you also mentioned, I'm moving on from the price element. In the previous segment, you mentioned about, you did that in passing, that consumers are now concerned about the, water consumption, water usage by the crops, environmental impact of these crops, social responsibility of the industry in not using child labor, and so on. So maybe it's a good time to elaborate some of these points, in the context of sugar industry.
Yeah, so I think sustainable farming or growing sugar sustainably or any agriculture commodity sustainably, I think is going to be the main focus going forward. And more companies are really looking at this particular space very seriously. Um, so because unless and until something is sustainable, you cannot really survive. You know,
Correct.
and over the years we've basically uh, you know uh, put everything on Mother Earth or Mother
Mm,
Nature.
mm,
Because we know that Mother Nature doesn't have any back office. It'll send
mhm.
you invoices for carbon dioxide, water pollution, or whatever, right? So,
Yeah.
but slowly and steadily, we are seeing the sudden weather disruptions, El Nino
Yeah.
effect,
La Nina and El
La
Nino.
Nina, El
Yeah.
Nino,
Mm,
those effects, and so people are becoming more aware, and that's why there's a lot of focus on sustainable way of farming. And I
mhm.
think consumers are really becoming consumers, organizations, communities are becoming more and more aware of that.
Right. Right.
So what does that mean?
Mm,
So what does that mean, Venkat? Just quickly. So basically, what kind of water practices do you have? How efficiently you're using water in whatever you're doing. So it's not just irrigation and pumping in water. Now people are moving to more precise way of irrigating,
Irrigation,
drip irrigation, and
sprinkler
feeding the
irrigation.
sprinklers at the right time in the day at the right amount. So people are using more and more scientific ways to
Mm,
manage that. Then one is the human side. So there's no child labor involved. The laborers are paid a fair wage, etc., etc. There's a beautiful story which Paul Pullman of the Unilever, ex-chairman of Unilever, he
correct.
put together, and
Mm,
he has explained sustainability. He said that in college we had a bunch of friends, and there was always one person who used to always not pay and always try to extract money from other people. Okay, you pay for me this time, and he never paid, right? Eventually, the other friends used to basically shun him off, right? He was
right.
no part. They used to avoid him.
Correct.
So organizations and communities are exactly the same, unless and until it's going to be a one-sided way. You're just only taking from communities and not giving back, whether it's fair wages or it's water replenishment or it's good manufacturing practices.
Mm,
Eventually, your business itself will not be sustainable.
correct. Correct.
So I think that consumers are also becoming aware, and that's the way things are going forward.
Right. Good. That helps us to understand that better. And last year we had COVID-19, and some people feel that, like, 2020 and 2021 are like have fused together. So it's maybe still relevant to ask this question. you know it would have impacted the consumption of sugar by the restaurants and related sectors because they all kind of closed down. Did the consumption in homes offset that fallout, of out of home consumption?
Yes, I think to a certain degree it did. So, but I think COVID definitely had a major impact because all your games, social events, restaurants,
Catering
uh, you
business,
know,
everything. Yeah.
catering business, everything, which is uh, you know the main channel for confectionaries for beverages, that totally got hammered. Uh, but your people started during COVID, they started ordering online, so the online e-commerce business suddenly went through the roof.
Correct.
And we saw that the consumption of chocolates and confectionaries through ordering was more than the normal self. And then the second thing which was happened, which was like in short burst, was instead of buying for, let's say, 1 month or
Hmm.
maybe 2 months, people were buying for 3 months, 4 months, 5 months, because they were not sure that whether it'll be so they started stocking up. So we also saw that the demand for juices and all the other food stuff also went up. There definitely was a little blip when economies opened up briefly, so people didn't really go and buy that. But then again, when there was a second wave of lockdown, again those things went up. But on a net basis, I think, as if you ask the global numbers, uh, from the usual demand of sugar, I think the world saw a net decrease of around 3 million tons
Mm.
as an effect of COVID. So
Mhm,
they've consumed less. They've consumed 3 million tons less
mhm,
during 2020 because
mhm.
of COVID, and that's a net
Okay.
impact of the out of home channel and the home
Uh,
channel.
Got it. Got it. So, thanks for those stats and inputs. So, as we come towards the end of the discussion, so one of the questions I ask is, what's one thing that you believed was true about, sugar trade when you started out, and over the years have learned that it is not so? I leave it to you which aspect of the trade or related to it, whether it's the commodities, markets, technology, people, whatever it is that you want to talk about.
When I started trading sugar and some of the other commodities, I was fairly new that time.
Mm,
And when I used to look at some of the seasoned traders,
mm,
in sugar and some of the other commodities, I used to think that, with 25 years, these guys would know inside out. They would really know, and they would take the right positions. They would read the markets the right way, and they would be really successful. And I think that's something which I found out that that's not true. You have 20 years, 25 years experience. You can never be sure, which way the market goes. So one thing I've learned is that if you really want to be a good trader or a good supply chain manager or a good participant or a player within
mm,
any commodity space, I
mm.
think you have to be very disciplined.
Okay.
You cannot really fall in love with your views or your
Right.
positions, right?
Right.
You have to keep your emotions away, and you have to, you know, trade or buy or sell a commodity in a very disciplined way,
Okay.
right? And you
So,
have to
what are the
hedge
couple of
your.
elements of that discipline, apart from keeping the emotion away? What are the couple of elements of that discipline that you will highlight?
So I think we should. I mean, whenever we like as traders, whenever we put positions, we used to define our stop loss,
Limits. Yeah.
whether depending on stop limit, stop loss, depending on what side of the trade we were. As buyers, we don't run after the market. We don't operate from a bear side that the market today it is $400, tomorrow it'll be 280. So you have to, if you're buying 100 tons, you have to keep hedging 20%, steadily, and then you know hedge another 20% whenever you see the next dip, and so on and so forth. Try and average out the price. In the long run, I think that is the best strategy. If you try and put all your eggs in one basket, or put all your uh, everything, and run after the market, then more often than not you get burned. So I think that's the key for managing commodities. Be disciplined. um, you know don't get emotional. Don't fall in love with your views or positions. There's an old saying in the trading commodity: your first loss is your best loss.
Mm.
So so you should be able to take
Get
that
out.
call, cut your losses, and then start afresh. And definitely with experience, your ability to put the odds in favor, or evaluate the odds, will definitely get more finer and finer. So you should take that, but at the same time, just maintain a solid discipline around that commodity.
Excellent advice, Viren, for anyone starting out in commodity trade, or for that matter, even international trade. And I think with that, we will bring this discussion to a close. I learned a lot, and I'm sure our viewers or listeners will definitely learn a lot about sugar trade, and a very interesting and fascinating commodity, as well as great insights from you.
Thank you, Venkat. It was an absolute pleasure.
And viewers, thank you very much for joining today's discussion with Viren. Please do subscribe and press the bell icon so that you can get the notification. Please subscribe to Move Conversations on YouTube. And with that, you would be able to hear many more such interesting conversations. We have already covered grains, we have covered coffee, we've discussed with Viren today about sugar, and we plan to bring in more and more aspects of global trade and global business in subsequent interviews. Thank you so much. Don't forget to press the subscribe button on your YouTube right now and subscribe to this channel. Thank you very much. Thank you for joining us in yet another episode of Move Conversations. Hope you enjoyed this episode. Please subscribe to the Move Conversations YouTube channel and press the bell icon to get notifications of new episodes. Thank you very much. Till I see you in the next episode. Thank you very much. Have a great day.